Hey everyone, welcome back to Corporate Decoder. We're about to dive into a report that has got some interesting financial maneuvers, and let's just say some loan agreements are getting a makeover, which might make you think twice about how they're managing their cash flow. Are you ready to decode some corporate action? Stick around as we break down the Arena Group Holdings Incorporated's latest filing. And before we jump in, if you love getting straight to the point with corporate filings, make sure you are subscribed. Also, we have a growing Discord community linked in the description below where we chat about these deep dives. This report comes from the Arena Group Holdings Incorporated, and it is filed with the US Securities and Exchange Commission, or the CC as it is commonly known. Think of this as a public company's official progress report. The filing is a Form 8K, which basically means something important just happened that the company needs to tell its investors about right away. It is not a regular checkup, like a quarterly report, but more like an emergency announcement. The company we're looking at is the Arena Group Holdings Incorporated, and they're incorporated in Delaware with a commission file number of 001-12471. Now, let's get into why this report was filed. One of the big reasons is about their money, specifically loans. The company entered into an amendment to a loan agreement with a company called Simplify Inventions Incorporated. This is basically a change to an existing loan. The original loan was for up to $50 million, but now, with this new amendment, they've reduced the maximum amount they can borrow to $25 million. It is like saying, we won't need as much money as we thought. This loan is now set to mature, meaning it needs to be paid back by the 31st of December 2027. They also amended another loan agreement, this time with Renew Group Private Limited. This agreement, originally dated back in 2022, has been changed several times before. With this latest amendment, this loan will also mature on the 31st of December 2027. Interestingly, at the time they made this change, the company also made a $13 million payment to reduce the amount they still owe on this Renew loan, so they're actively paying down some of their debt. These changes to their loan agreements are significant enough that they fall under an item in the report talking about direct financial obligations. This means the company has taken on new debt or modified existing debt, and that is something investors need to know. And to top things off, on the 7th of January 2026, shortly after these amendments were made, the company issued a press release talking about these Simplify and Renew loan changes. This press release is also included with this filing. This is where they list the actual documents. Exhibit 10.1 is the amendment to the Simplify loan, and Exhibit 10.2 is the amendment to the Renew loan. It is important to note that these are amendments, meaning they're changing what was already in place. Exhibit 99.1 is that press release they put out to announce these loan adjustments. The report is signed by Paul Edmondson, the Chief Executive Officer, on the 7th of January 2026. Now, let's talk about what all this means. What is the story here? The Arena Group Holdings Incorporated is making some significant adjustments to its debt. By reducing the amount available under the Simplify loan from $50 million to $25 million, they're signaling a potential shift in their borrowing needs or perhaps a strategic move to de-risk their balance sheet. It could mean they anticipate less need for external funding, or they're proactively managing their total debt exposure. The fact that they also made a substantial $13 million payment on the Renew loan shows a commitment to reducing their outstanding obligations. This could be a sign of improved cash flow or a deliberate effort to deleverage. However, extending the maturity date for both loans to the 31st of December 2027 gives them more breathing room, but it also means these debts will remain on their books for a longer period. From a Warren Buffett perspective, we'd be asking why these changes are happening now. Are they anticipating tougher economic times and want to have less debt hanging over them? Or are they confident enough in their future earnings that they can manage these extended repayment timelines? The reduction in the Simplify loan facility from $50 million to $25 million is a critical number. It suggests either reduced capital expenditure plans, a shift away from debt finance growth, or a simply prudent step to lower interest expenses if they don't need the full amount. Looking at the bigger picture, companies often amend loan agreements for various reasons. It could be to secure better interest rates, adjust repayment schedules to match cash flow, or to comply with new covenants or financial targets. In this case, the extended maturity dates coupled with the reduction in borrowing capacity paints a picture of a company focusing on stability and reduced financial leverage in the medium term. The key risks here would be if either of these loans were tied to significant operational changes or if the reduced borrowing capacity impacts their ability to fund future projects. The opportunity, however, is that by right-sizing their debt and making payments, they are strengthening their financial foundation. This could lead to improved credit ratings, lower interest costs in the long run, and greater financial flexibility. In conclusion, the Arena Group Holdings Incorporated is actively managing its debt situation. The reduction in one credit line and the repayment on another, alongside the extension of maturity dates, suggests a strategy of financial prudence. While this provides stability, investors will want to watch how these decisions impact their growth trajectory and overall profitability. Alright, that is our breakdown of the Arena Group Holdings Incorporated's latest filing and what these loan amendments might mean. What is your take on these financial maneuvers? Do you see this as a smart move for stability or a sign of caution? Drop your thoughts in the comments below. If you found this analysis valuable, hitting that like button really helps us out. And subscribe for more deep dives into corporate filings. Don't forget to check out the Discord community in the description for more discussions. Thanks for watching, and we'll see you in the next one.